Hey, good afternoon, everybody. Today's topic is we are going to be talking about totally legal and totally surprising tax write-offs that can save your business thousands in taxes. So that will be the subject today. Any questions, post them in the chat. Without further ado, we'll go ahead and get started today. If you haven't purchased Ty's book or taken a look at it, Business Credit Decoding, I read it a couple of years ago. Great book. Highly recommend it. So let's go ahead and get started. Paying taxes is a necessary for fundability. Everybody knows you got to pay your taxes, whether they're personal or business. But when you own your own business, you have to pay it. There's no getting around it. It's part of the fundabilities that you always hear us talk about in building business credit. It's something that vendors, lenders, banks all check on. Not only is it illegal not to pay it, by the way, but paying your taxes, personal and business taxes, is a major factor in fundability. So, listen, the first thing that they're going to check on, we talk a lot about business addresses, business phone numbers, Dun and Bradstreets, and things of that nature. But at the end of the day, if you're not paying your taxes, there's probably very little probability that they're going to help you out trying to get business credit, business loans, and things like that to look into the future for your business. If you apply your business funding and a lender sees that you haven't been paying your taxes, it will likely result in a denial. I mean, that kind of goes on both ways. It's for personal and business. They check on these things. It's a little known fact, but it is true. They check on it. I know we talk about having addresses match up with the IRS and Secretary of State, but also make sure that you're paying the IRS. How, at the end of the day, if you're not paying it, how can they believe you that you'll repay them? And that's for any type of loan or any type of business credit. Don't pay more than you have to. I know that there's a lot of different companies out there that offer, do your own taxes and things like that. But there are many, many things that you can write off that can be missed when it comes to business expenses. So there's a lot of stuff that I didn't know as a couple of years ago that I've learned, up to today. Again, there's no reason to pay more than necessary. A tax professional is the best way to make sure that you take advantage of all your tax write-offs available. There are more than most realize, and we'll get into a few of those. So hopefully those that are you watching this today, this webinar today, you can find out a couple things, and hopefully we can save you a couple thousand, maybe even a few thousand next year. And some of these are actually probably what really surprised you. Simplified home and office deduction. This is one of the ones that I was kind of scratching my head with, but this kind of goes into a little bit greater detail. Pretty much everyone knows there's a way to deduct home office expenses on your taxes. If you work from home, you can deduct the portion of the home that you use specifically for business purposes. So if you have a dedicated office space that you use, and you have to determine the percentage of the home expenses associated with that. For example, if your home space is 1/4 of the total square footage of your home, then you can deduct 1/4 of the utilities as business expenses. So we'll go into a little bit of the math on this. This gets very tedious, and a lot of the home business owners do not take the deduction because they do not feel they can properly keep up with it. But it's really not that hard to simplify things. You just take it in a 12-month period, and you divide the square footage into what the square footage of your office is. And I believe the max for that is 1,500. Or they can't say the only use for that portion of their home is for work. So, for example, if you work in the kitchen table, that doesn't count. You have to actually have a dedicated area where you're operating or running your business. What you may not know is that there's a simplified calculation to this deduction. The simplified option is the quick and easy way to determine your home office deduction. You just multiply your office's total square footage by $5. The maximum amount you can claim using this method is $1,500. So there you have it. Just by running your home office, a lot of you may not be writing that off at the end of each year, and that's really critical that you're doing that. Make sure, again, going back to having a professional, making sure that you're not missing anything. Qualified business income deduction. This is pretty interesting. If you own a sole proprietorship or a partnership or an S corporation, you may be eligible for a qualified business income, QBI deduction. If so, you can deduct up to 20% of your qualified business income for your tax return. 20%. That's a lot. That means if you have qualified business income of 100,000, you can deduct 20,000 and only pay taxes on 80,000. So all of you that have own a sole proprietorship, partnership, S corporation, ask your accountants about the QBI deduction. That's a lot of savings. That's 20%. Business bonus depreciation. Let's talk a little bit about this. Business assets like equipment are depreciated on books over time as a set rate, meaning you don't count the full cost of the item in the first year it's purchased. However, under the bonus depreciation, you can deduct more than the standard depreciation in the first year. That's only for the first year. Before 2017, the bonus depreciation amount was about 50% of the cost. So I believe that's changed a little bit. We're going to go ahead and get into that. Then you would depreciate the remaining 50% of the cost over the life of the asset. However, the new law says that anything purchased between September 27th of 2017 and January 1st of 2023, you can deduct 100% of the cost in the first year the item was put into service. So you bought a new piece of equipment, you did equipment financing loan or leased it out. The new law states that you can now write 100% of the cost in the first year the item was put into service. So that's perfect. That helps a lot of people out. That's a lot of deduction, especially if you guys are purchasing 5 new computers, a new vehicle for the business, anything like that. You do not have to do that, but it could be advantageous to do so. Your tax professional can help you make that decision. What types of items qualify for bonus depreciation? Tangible assets with a useful life of 20 years or less as dictated by the IRS. Some items fall into this category include machinery, equipment. Equipment falls under a lot of different things, guys. A lot of different things, folks. I mean, if you want the definition of equipment, maybe just Google business equipment loan, and most of the time a bank will come up and they'll show you the different type of equipment loans that they service. Could be kitchen stuff. It just depends what industry you're in. Like here, if you own a machine shop or you need machinery for your business, tools, equipment, computers, appliances, and furniture. That's another thing. If you go to furnish your office space, or you have a brick and mortar location and you need the furniture, you should be able to use that as a bonus depreciation and write that off as a deduction your first year. Any questions about that? Please hit us up. Let us know if we can, give you any further details. Business related legal and professional fees. If you use an attorney or an accountant for business services, their fees are deductible. So did you have an accountant prepare your taxes, or are you going to have an accountant prepare your taxes this year? That would be deductible. That's something that, standard person like myself, I don't have a business. I don't get to write off my taxes, but those that have businesses, they're much more complicated. As you can see, seeing this, there's a lot of write-offs. So the accountant's going to do a lot more work and he's going to charge a lot more, but the deductions will be a lot greater because you can write that off. Using an attorney to help draft employment contracts or a writer to write a business plan, that's all tax deductible. So when you're going into these things and you're looking for ammunition to grow and build your business and you're thinking, wow, this is so expensive. It is in most cases, but understand that this is one of these times that taxes and the IRS are on your side as a small business owner or a business owner, where you can deduct some of these expenses and save thousands of dollars. Dues and memberships. Fees paid to professional organization for memberships are deductible. So a couple examples of this. So if you're a doctor or a pediatrician, you want to deduct any fees paid for a membership to the American Academy of Pediatrics, you can do so. If you're an architect and you join the ADA or the ADDA, the American Design of Drafting Association, you can write those off as well. And if a business pays the fees, it is tax deductible on the business's tax return. So Any of you that belong to any memberships out there, take a look at that. I know we do a lot of business in the real estate industry, the trucking industry. It may take a second, behoove you to take a second look at that. If you're part of a membership, make sure to log that correctly so that you can write that off on your 2021 taxes. Interest on a business loan. That's pretty interesting. Yes, you can deduct the interest you pay on a business loan. That's a big deal. Some business loans can be as high as 29%, depending on who you do your banking with or who you got your lending from. So, yep, you can deduct the interest you pay on the business loan if you meet a few qualifications. This includes as follows. Funds come from the actual lender, not family or friends. So you can't have family and friends deduct directly into your bank account or loan you money, and you're writing checks to them and giving the IRS copies of those checks. It actually has to be from a lender or a financial institution where you borrowed this money from. To no friends or family. You are liable for the debt legally. So legally meaning that if you took a loan out from a credit union and it's a business loan, but you also had a personal guarantee underneath of that, that would be considered you being liable for the debt, even though it's written as a business loan, because there is a personal guarantee. There is that bond there that says that, hey, the interest on this loan should be covered. Both you and the lender intend for the debt to be repaid. I mean, I think that's pretty clear. I mean, when you get a loan out from the bank, their idea is that you're going to pay them back. That's how they make money off of interest, is by you paying them back. When they have to sell an account off for 3 cents on the dollar or 10 cents on the dollar, they're not making that much money. But the lender fully intends that you pay it back when when you take out a loan, as well as I'm sure you go into it with that idea as well. It's also important to note that you have to actually spend the loan funds. So the funds just can't sit there static. You have to do something with them. If it's a business loan, you can't just let it sit wherever it is and not touch it and not utilize those funds. You cannot just put them into account and make payments. That's considered an investment by the IRS. So in other words, if you went to the bank today and you got a $100,000 loan and you decided that you were going to collect the interest off your savings account on that, and you didn't disperse those funds for your business or utilize them in some way that improves your business, then that's going to be considered an investment, and then you're not going to be able to write off those taxes. It's just, don't even bother going down that path. And therefore, the interest is not tax deductible as the interest on the business loan. So there you have it. Bank charges. Everybody loves bank charges. I don't really, but it's pay attention to your banking credit card statements. I can't tell you that enough, because all these little charges and fees are tax deductible. So anything that, from putting fuel in your work van to, lunches that you may buy prospective clients, all these little receipts and all these little things add up over the year. So you can save thousands just by writing those little things off. It may not seem like much, but again, it's going to add up. Trust me. Just think of your personal life before you owned a business and all the times you went out to lunches with your friends or dinners with your friends and put gases in your car and things like that. Now you can look at this as that it's what is considered a business expense and start tallying these things up and writing them off. You should be doing that, keeping a very straight log on that day in and day out, because I'm sure as business owners, you're using those credit cards a lot, especially your business credit cards, especially when you consider all these charges that it can encompass. Costs such as cash deposit fees. Everybody's been to the bank. I went to a show at the casino the other day, and it was one of the MMA fights or something. Anyway, I had to get cash out, and it was $13 for the cash ATM transaction. Now, I bank with Chase, so that was ultimately waived. But if you're not banking with a bank that that is going to reverse those fees. Those fees can add up quite a bit when you're taking out fees. I mean, I was stunned. I remember 15, 20 years ago, the fee wouldn't be more than $3, but today it's a lot more expensive. So your cash deposit fees, your merchant service fees, things of that nature, where, if you're someone that's in a business where you're charging other prospective clients out there, and they're utilizing their credit card to pay you, that would be considered a merchant service fee. And you should be able to write that off, no problem. Sorry about that. Late fees, any type of late fees, try not to make that a habit, but if you've encompassed some late fees over the year, they can also look at being tax deductible. Online banking fees, if your bank or your financial institution charges you as a business, that's something you can also write off as an expense. And even credit card and convenience fees, what I just talked about at the beginning, using your card at an ATM machine, or people that you go someplace and they charge you, you don't notice on your receipt, but they charge you an additional 5% for using their merchant services. All that can be written off. These all count. So at the end of the day, keep up with them for tax purposes, keep them in a folder wherever you need to. Continuing education expenses. A business owner, you can pay for continuing education for your employees, yourself, and it could be tax deductible. Sorry about that. The IRS says it has to maintain or approve skills required for the job to be deductible. So, I mean, if you're in the plumbing industry and there's classes that surround, putting toilets in and, flushing pipes out, things of that nature, then, that class would be considered with the actual business that you're doing, with what you're actually conducting. So the IRS say it will maintain or improve the skills required for that job deductible. So anything really surrounding the business, if you're a trucker and you want to take driver safety classes or something like that, that should be tax deductible for you. That includes us too. And we always tell clients, look, our program is educational. It fits a large compass of people. So it fits a large compass of people. So you should be able to write this off. I have a question here. What is the cost for the? Okay, get back to you in a second about that. The IRS says it will. Moving on. The deduction includes the number of education related expenses. For example, a course fees and tuition, books, supplies, lab fees, and other similar items. Let's talk a little bit about this one. I don't know how many of you that this is going to, include if anyone has animals that they use for the business, but I was shocked by this after looking over the presentation that you can actually write off your animals as a business tax deductible. And I'll get into an example of that in a second here, but the cost of the animal itself and care of feeding it. So, you got a great big dog like Beethoven or something like that, and you're spending $250 on dog food each month, you can write that off as a tax deduction. Of course, you just can't buy a dog or a cat and call it a business animal, but there are some exceptions to the rule. And here's one of them. But for example, if you have a dog and you use it as a guard dog for your business, some of those expenses could be tax deductible. So if you're working out of your home and you have a dog that keeps security for you, and that could be a tax deductible expense. One fun example of this, and I was reading others had to get a good laugh, as a junkyard owner who bought cats to help with rats. The IRS ruled that it was a legitimate business expense and therefore it was deductible. So this guy, this person got all their expenses for the cat food, milk, whatever he had to, and he said he was using it for rats. And Mary put on here that all college mascots are also tax deductible. Thank you, Mary. That I didn't know that, but that's that's pretty good. Um, so also another example, if you're an animal breeder, you can also deduct costs related to the animals for breeding. Website and other internet related expenses. The costs associated with maintaining a website can be tax deductible. This may include hosting fees, design costs, and a number of other related expenses. Magazine subscriptions is another one. You can deduct the cost of some of the subscriptions, items such as professional journals, trade publications, even technical journals. It's important to note that you cannot deduct the cost of the magazines for a waiting room. So those of you who are working out of your home or you have a brick and mortar and you have 15 subscriptions to the magazines, I don't know if that's still a thing or not. I mean, I was in the doctor's office the other day, didn't have any magazines. I think pretty much everybody looks at their phones now for here on out. So again, going back to slide one, don't do it on your own. Unless you're a CPA or you've got some college courses behind your back, get a professional to do your taxes. You want to know the number one surefire way to pay more than you need to in business taxes? Try to do them yourself. Yeah. So sometimes we're our own fools. So, collect all the data, everything that is related back to your business as an expense. Write it down. See what your tax professional can come up with. There could be a lot more out there than you actually know about. After all, the fees are tax deductible for the accountant. So we talked about that as a business. Any tax professional you hire, it should be tax deductible for you. Still knowing all the things you can deduct can help you better prepare, making things much easier for your tax preparer. So again, I said this like 15 times. Just keep all your receipts, keep everything that is associated with building out your business and business expenses. What about fitness industry and buying fitness programs? That could be, Wendy. I would have to tell you, you'd have to go back to your tax professional and find that out. That's a pretty interesting question. I'll do a little googling on it myself, but that's pretty interesting. I certainly, if you have your own fitness center or you're looking into it, I would look at everything that you have to purchase and everything that you'd have to acquire for that business, and then contact a tax professional. But I'll, if you want to reach back out to me, I'll give my number at the end of this, and I'll see if I can find you some additional information. Being prepared, still knowing all the things you can deduct can help you make a better prepare, making things much easier for your tax preparer. I'm not sure if I read that or not, but might as well. If you have all your bank charges, receipts, magazines, fees for memberships, and the cost of the dog food, your guard dog at hand, they will surely thank you. So, if you have cats at your house or you have a cat at your location down the street, and you have a rat problem or something, that might be something that you could write off for some taxes. So recap, paying taxes is a necessary fundability, but don't pay more than you have to. There are a number of surprising business tax write-offs you may not know about. Being aware to make it easier to have all the information for the tax preparer needs ready to go. If you want more information, please see this presentation's description. Next time, Ty or Steve will be talking about using Fundability to win lucrative government contracts, find how government contracting works, and how your small businesses can get in on the action. So learn more about these resources the SBA has to help and land government contract. My name is Scott Krakowski. I am one of the executives here. If you guys want to reach out to me and discuss business credit building, or you have different questions about taxes, if I don't know them offhand, I will tell you I'm not a tax professional. I went to college 20 years ago for a criminal justice degree. So, but I have been in banking for more than 15 years. So there's a lot about personal credit and business credit that I can help you with. But as far as those tax questions, send them our way, and we'll see if we can get an answer for you, especially you, Wendy. I'll be looking that up as soon as I get out of this webinar today. I want to thank you guys all for attending. Please reach out to us for some additional information. Our number is 877-600-2487. My direct line is 727-977-9101. You can reach me. I'm typically here 9 to 6 most days. You can give me a call. If I'm not available, one of our pleasant customer service team will be happy to assist you, take down your information, and I will get back to you ASAP. It's been a pleasure, everyone. Thank you for joining today, and thank you for being members or looking into the Credit Suite program.